Good morning, I'm Gemma Breeze, Client Portfolio Manager on npower's Optimisation Desk. Welcome to today's market updates on Monday the 7th of March. So to summarise this morning, we've seen gas markets open a touch lower than last week's close despite tighter fundamentals driven by the colder weather and also firmer oil prices, while power markets today have been slow to get going as is normal for a Monday morning, but look set to follow the gas markets and open flat to a touch lower. So if you have any questions, please do contact us on the displayed email address, or for more detailed information, continue to watch. So the front month Brent contract this morning has broken through the $39 per barrel mark as US drillers cut the number of active rigs to the lowest level in more than 6 years. And today's gains come after Brent closed last week on a third week of gains, which is the longest run the oil market's seen since May last year. And as mentioned, this is just due to the declines in US crude production. So if you look at the gas system today in a bit more detail, it's opened undersupplied with the line pack currently forecast to close nearly 26 MCM short. And this is due to the above seasonal normal demand driven by the colder weather we're experiencing today, but also due to high levels of gas-fired generation online. We've seen Norwegian flows via the Langlo pipeline, however very healthy today at over 71 MCM at present. We're also seeing healthy levels of flows through the BBL pipeline, which is currently flowing around 29 MCM. We've also seen flows through the IUK today in the direction of the UK, currently flowing at 13 MCM, although nominations are lower. And storage withdrawals are relatively mute for the time being, with only significant withdrawals from Rough. However, given the short system, we are likely to see nominations change throughout the day in order to bring the gas system to balance. Take a look at the power system. Margins there are quite tight today, with the peak forecast at just 6.4 gigs. We've seen the French interconnector at present currently importing at just half capacity, which is 1 gig, although nominations do suggest that this will pick back up to the full 2 gigs once the morning peak is finished, and will be at that level for the rest of today. Wind generation is relatively subdued today, currently falling short of forecast at just over 2 gigs. However, forecasts do indicate that this is going to tail off further across the day to perhaps be over, just 1 gig over this evening's peak. We've also seen a slight reduction in nuclear generation, which is currently just 6.8 gigs. And as a result of all of this, we've had to see gas-fired generation ramp up in order to cover the shortfall from the lower wind, the French interconnector and nuclear generation. And as a result, we have seen those tighter peak margins today. So that completes my market update for today. If you have any questions, do get in contact with us. We'll see you at the same time again tomorrow. Have a great day.